Hello viewers, welcome to my channel. I'm Hasham. So already I have completed 4 main problems on holding companies and also 10 short problems on holding companies. Consolidated balance sheet. So hope you have already watched the introduction part and also the starting videos of basic calculations regarding the calculation of goodwill or capital reserve, capital profit, revenue profit, minority interest. All these basic calculations we have done in the starting problems. So if you have watched the videos in rhythm, first, second, third, definitely you can get a good grasp on the subject. Otherwise, if you join in between, you cannot be able to understand. So my suggestion, if you are genuinely interested in learning the subject, in getting a command on the subject, watch the video from beginning till end without skipping and don't join in between. So if you have not watched the earlier videos, go to the playlist of my channel, select the subject Advanced Corporate Accounting and the topic Holding Companies. Watch the earlier videos, get a good command and then watch this video. So before starting the next problem, that is problem number 5, I expect my viewers to have a printout of the problems which are given in the link under my description. So keep a hard copy before watching the problems. Now 5th problem I am reading out. From the 2 balance sheets of H Limited and S Limited, prepare consolidated balance sheet. So 2 balance sheets, H Limited, S Limited, authorized and issued shares of rupees 10 each, 1,20,000 H Limited and 30,000 in S Limited. The H Limited share capital will come as it is in the consolidated, whereas the share capital of S Limited will not be taken in the consolidated balance sheet. How many shares are there? 30,000 divided by 10, 3,000. So remember this point. The subsidiary company is having 3,000 shares of rupees 10 each. General reserve are given for both the companies. P&L account, profit and loss account is given for both the companies. Creditors, trade payable, we add up both in consolidated balance sheet. Then building at cost, we add up both. Plant and machinery, we add up both. Shares in S Limited, 2,000 shares of rupees 10 each, 25,000. This is the investment made by H Limited in S Limited. So how many shares H Limited has purchased? 2,000. How many total number of shares in S Limited? 3,000. That means out of 3,000, 2,000 shares are held by H Limited. 1,000 shares are held by the outsider, minority interest. And the cost of the investment was 25,000. Then stock, inventory is given, debtors, trade receivable is given, bank balance, cash and cash equivalent are given. Simply we have to add up all these things. Now when H Limited acquired 2,000 shares in S Limited, the latter company had reserves amounting to rupees 5,000, none of which has been distributed since then. That means at the time when H Limited has purchased the shares in S Limited, at that time there was a reserve of rupees 5,000. So this reserve is a capital profit. Any profit or reserves appearing before acquisition of shares, that will be treated as a capital profit. And all the reserves and profit earned after acquisition, that will be called revenue profit. The capital profit will be considered for calculating goodwill or capital reserve as usual. Now see the solution from beginning. The consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st March 2006. Actually date is not given here. Simply we'll put it dash, as on dash. Specifically date is not given. Now equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest number 3. First you draw the blank balance sheet format as per the Companies Act 2013 without taking the amounts. Amounts we have to calculate in working note and notes forming part of financial statements. So share capital 1, reserves and surplus 2, minority interest 3, non-current liability are not there, but still for the sake of formality we are writing it. Current liability only one item, trade payable 4th. This is the total of liabilities. Asset side, non-current assets, fixed assets, tangible 5, intangible 6. Then non-current investments are not there. Current assets are inventories, trade receivable, cash and cash equivalent, other current asset if we have. Otherwise we put a dash. This is the format, blank format we have taken. Now in working notes, focused here now. Total number of shares in S Limited 3000. Just now I have read the question paper. In the problem it is given 30,000 divided by 10. 3000 shares are there in S Limited. Out of 3000, 2000 shares are held by H Limited. Number of shares held by H Limited 2000. Number of shares held by outsiders, minority interest 1000. Now proportion. What is the proportion of shares held by H Limited and what is the proportion of shares held by outsider? The share of H Limited 2000 divided by 3000, 2 by 3, and share of minority interest 1000 by 3000, 1 by 3. Now remember, 2/3 of share is held by H Limited, 1/3 of shares held by outsider. First working note complete. Second, total capital profit. Capital profit means any reserves or profit appearing at the time of acquisition of shares. In the problem, last line it is given. At the time when H Limited acquired the share of S Limited, there was a general reserve of rupees 5,000 at the time of acquisition. So 5,000 rupees is the capital profit. Now share of H Limited, this 5,000 rupees capital profit will be distributed between H Limited and minority interest. What is the share of H Limited? 2 by 3. So 5,000 into 2 by 3, 3,333 is the share of capital profit of H Limited. Share of minority interest 5,000 1 by 3, 1,667. तो 5,000 रुपीज जो कैपिटल प्रॉफिट है उसको दोनों में डिस्ट्रीब्यूट कर दिए, H लिमिटेड का शेयर, माइनॉरिटी इंटरेस्ट। नाउ गुडविल और कैपिटल रिजर्व, व्हाट इज द कॉस्ट ऑफ इन्वेस्टमेंट गिवन इन द बैलेंस शीट? एसेट साइड, H limited has invested in S limited for an amount of rupees 25,000, cost of investment. From this we deduct two items, paid up share capital and capital profit. Paid up share capital, how many shares? 2,000 shares, face value 10 rupees, so 2,000 into 10, 20,000. Share in capital profit, just now we have calculated 3,333. This is the share of capital profit of H limited, 3,000. Total 23,333. Subtract 25,000 minus 23,333. 1,667 is the goodwill, and this goodwill will be taken under intangible asset in the balance sheet. Now minority interest. Minority interest means the total stake of outsiders in the business. So how much? Paid up share capital, how many shares are held by outsider? 1,000. So 1,000 into 10, 10,000 rupees. Share in capital profit, already we have calculated capital profit is here. How much share of minority interest? 1,667. 1,060. Share in revenue profit. Revenue profit, that means profit earned after acquisition. In the problem it is given the reserves were 6,000 as per the balance sheet. At the end of the year, the reserves were 6,000, but at the time of acquisition of shares, the reserve was 5,000. So how much reserves have increased after acquisition? 1,000. जो टाइम पर एक्वायर करे वो टाइम पे 5,000 था, और जब बैलेंस शीट बनाए वो टाइम पे 6,000 हो गया, तो 1,000 रुपीज रिजर्व्स हैव इंक्रीज्ड आफ्टर एक्विजिशन. So share in revenue profit 6,000 minus 5,000, 1,000. अब ये 1,000 में माइनॉरिटी का इंटरेस्ट कितना है? 1/3. तो 1,000 into 1/3, 333. Now share in P&L account. Profit and loss account shows 9,000 rupees in the balance sheet. Nothing is given. How much was the P&L account at the time of acquisition? Not given. So we'll make the assumption. The whole 9,000 rupees P&L account is the current year's profit after acquisition. Is the current year's profit after acquisition. The revenue profit. It's a revenue profit, complete 9,000. So 9,000 into 1/3, 3,000. Take the total, 15,000 rupees is the minority interest. This will be taken on the liability side. We have completed the working notes. Now we'll discuss about the notes forming part of financial statements. The first note, share capital. The share capital of H limited as it is. Whatever is given in the problem, same thing. 12,000 equity shares of rupees 10 each, 1,20,000. Take this 1,20,000 here in the capital. Now reserves and surplus. In reserves and surplus, we take the general reserve and P&L account of H Limited as it is, always. Not only in this problem, every problem we are doing the same thing. The general reserve and profit and loss account of holding company will be taken as it is. So, general reserve of H Limited 25,000, P&L account of H Limited 12,000. These are given in the balance sheet, we have taken it. Now, revenue profit of S Limited. In S Limited, complete 9,000 rupees P&L account balance is given. We made the assumption all these 9,000 rupees profit are earned after acquisition. After acquisition, before acquisition, P&L account balance was not there. So 9,000 rupees into 2 by 3. 2/3 is the share of H Limited. So 9,000 into 2 by 3, 6,000. Now revenue reserve. Revenue reserve means the reserve created after acquisition. Total reserves are 6,000. Out of 6,000, 5,000 are the reserves before acquisition. So 1,000 is the reserve created after acquisition. It's a revenue reserve. So 1,000 into 2 by 3, 667. The total of the reserves and surplus 43,667. Take it here. Reserves and surplus 43,667. Now note number 3 is minority interest. Already we have calculated a minority interest here in working notes. 15,000. So minority interest 15,000 I have taken here. Minority interest. Trade payable. Creditors. Add up the creditors of H Limited and S Limited. Trade payable 20,000. I have taken 20,000. So total of the liability side is 1,98,667 over. Liability side completed. Now I am coming to the asset side. Asset side, tangible assets. Fifth, note number 5. Fixed tangible assets. We have 2 tangible assets, building and plant and machinery. For building, H Limited 72,000, S Limited 25, add up 97,000. For plant and machinery, H Limited 30, S Limited 10, total 40,000. Total of tangible assets 1,37,000. Intangible assets, goodwill. Goodwill we have calculated in working note here. 1,667 is the goodwill. So take intangible asset 1,667. Current assets, inventory, stock. Inventory consists of stock. Stock of H Limited 18,000, S Limited 3,000, total 21,000. Take 21,000. Trade receivable, debtors. The debtors of H Limited, S Limited add up both 29,000. Last one, cash and cash equivalent. So here we take the bank balance of H Limited, S Limited 10,000 rupees. We have taken 10,000 over. Balance sheet is tallied. So what I am explaining is, what I am seeing is, every problem 90% points are same. No difference at all. Every problem, what we are doing, we are adding up all the tangible assets, intangible asset, goodwill we are calculating in working note. In working note, we have to see how much is the share of holding company and how much is the share of outsider. We have to see in the subsidiary book how much is the capital profit, how much is the revenue profit. Divide the capital profit between holding company and outsider. Then we calculate the goodwill. Cost of investment minus paid up share capital and capital profit. Deduct, we'll get the goodwill. We calculate the minority interest. That's it. These are the things we have to make calculation in working notes. After that, notes forming part of financial statement. That's all. So this is the end of problem number 5. Come on, now we'll start the next problem, problem number 6. On 31st March 2004, the balance sheet of Big Limited and Small Limited stood as follows. The 2 companies are there, Big Limited and Small Limited. Both the balance sheets are given. Share capital, shares of rupees 10 each. 5 lakh rupees in Big Limited and 3 lakh rupees share capital in Small Limited. Reserves are given for both the companies. P&L account given for both the companies. Creditors, these are the accounts payable. Simply we have to add up the creditors in the consolidated balance sheet. Now sundry assets, we are given for both big and small. Add up both. Investment in shares of S Limited, 60% shares. That means Big Limited has purchased 60% of share capital of Small Limited. The remaining 40% shares are held by outsiders, minority interest. Preliminary expenses are given only in Small Limited. See, preliminary expenses is a fictitious asset. So this is a capital loss. So this preliminary expenses will be deducted from capital profit. Then shares in small limited were acquired on 31st March 2004. Actually, there is a printing mistake in the problem. It is given as 1/4/2004. Cut it off. That is not 1st April 2004. That is 31st March 2004. There is a printing mistake in the problem. So shares in small limited were acquired on 31st March 2004. Prepare a consolidated balance sheet as on 31st March 2004. That means the date of balance sheet and the date of acquisition of shares both are same. When both are same, whatever the reserves and P&L account balance is there in small limited, that complete balance will be capital profit. Now see carefully. Consolidated balance sheet of big limited and its subsidiary company small limited as on 31st March 2004. So first of all, blank balance sheet format will make equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest 3, non-current liabilities dash. Without taking the amounts, first of all you have to make a blank balance sheet. Later on in working note we'll calculate one by one. So all these notes are forming part of financial statements. Then current trade payable, 4th note, total of the liability side. Asset side, non-current assets, fixed assets, tangible 5, intangible 6. Non-current investment are not there. Now current assets, inventories, trade receivable, cash and cash equivalent, other current assets. According to the format I have written 4, all the 4. But in this problem, we are not given any current assets. So we'll put a dash in all the current assets. Take the total. Now see the working note here. Share of big limited is 60%, share of outsider is 40%. First thing. Second, the date of acquisition of share is 31st March 2004 and the date of balance sheet is also 31st March 2. There is a coincidence of the balance sheet date and the date of acquisition of shares. So therefore the profit and loss account balance and general reserve of small limited is completely capital profit. Any profit or reserves before acquisition of shares will be capital profit. Here the date of acquisition is 31st March 2004 and the date of balance sheet given in the problem is also 31st March 2000. So whatever balance of reserves and P&L account in small limited, that completely will be capital profit. The preliminary expenses should be deducted from capital profit. This preliminary expenses is a fictitious asset. It's a loss. So this preliminary expenses will be deducted from capital profit. Now calculation of capital profit, reserves of small limited 60,000, profit and loss account balance of small limited 40,000. Total capital profit is 1 lakh, out of which the preliminary expenses will be deducted. The capital profit net will be 80,000. This 80,000 capital profit will be distributed between big limited share and minority interest. So 60% of 80,000, 48,000 is a share of capital profit of big limited. And 40% of 80,000, 32,000 is a share of minority interest. Now minority interest value, how much is the amount of minority interest? Paid up share capital, 40% share capital of small share capital 3 lakh, 40% 1,20,000. Now sharing capital profit, just now we have calculated 32,000. So total minority interest 1,52,000. This will be taken in the consolidated balance sheet on liability side. Then calculation of goodwill or capital reserve. As usual, every problem we are doing the same way. The cost of investment given in the balance sheet. In the balance sheet in the problem, asset side of big limited, you can see investment made 2,50,000. Investment made in small limited 2,50,000. From this we deduct two items, paid up share capital and capital profit. Paid up share capital 60% of 3 lakh. The total share capital of small limited is 3 lakh. 60% is held by big limited. So 60% of 3 lakh, 1,80,000. Sharing capital profit, just now we have calculated 48,000. 48,000, add up both 2,28,000, subtract 250 minus 228. 22,000 rupees is the goodwill. This will be taken under intangible asset in the consolidated balance sheet. Over. Working notes completed. Now we are moving on to the notes forming part of financial statements. First note regarding share capital. Share capital is the capital of holding company, big limited. The Big Limited is having 50,000 shares of rupees 10 is given in the problem, 5 lakh rupees. That 5 lakh rupees I have taken here, share capital. Second, reserves and surplus. In reserves and surplus, we take reserve and P&L account of Big Limited. Big Limited only, because small limited reserves and P&L account completely are capital profit. And already we have taken here. Small limited reserves and P&L account is completely capital profit. We have taken here. So only Big Limited reserves and P&L account 2 lakh. That 2 lakh rupees I have taken here. Now third is minority interest. Already we have calculated minority interest somewhere here, 1,52,000. That 1,52,000, note number 3. Note number 4, trade payable, creditors. The payables are taken, creditors of Big Limited 70,000, small limited 50,000. 1,20,000 trade payable. Take the total of the liability side, 9,72,000. Now asset side. Now sixth is tangible fixed assets. Tangible fixed asset, Big Limited 520, small limited 430, 9,50,000 is the tangible fixed asset. Intangible asset, goodwill. So goodwill already we have calculated here, 22,000 is the goodwill amount. I have taken goodwill. No current assets are there. Balance sheet tally 9,72,000. That's all. So we have completed totally 6 problems. Every problem you have seen, 80% problem points are same. Only 1 or 2 new points. So concentrate. Definitely you can be able to get a good command on these problems of holding companies. So if you are satisfied with my lecture, give a like to the video. Share it in your group, in your friend circle. Give your comments on these videos, and lastly, don't forget to subscribe my channel. We'll continue the next problem in the next video.